In today's video, I'm going to show you some dividend investing strategies, specifically how to generate $100 in dividend income every single month. I'm also going to show you how to calculate these numbers by yourself because everybody is going to be investing in many different stocks. And lastly, I've been getting a lot of questions about weed stocks, so I'm going to show you the one marijuana stock that I would consider investing in. Welcome back to the channel, guys. My name is Bruce Wang. For anybody who doesn't know me, I'm a real estate investor, dividend investor turned YouTuber. And in today's video, we're gonna go over my M1 Finance portfolio to show you how I do my dividend investing strategies. So let's jump right into it. So in today's video, I'm using the M1 Finance platform to do all of my dividend investing. I recommend M1 Finance because they have free trades. They also have fractional shares, so you can buy fraction of Apple, you can buy a fraction of Amazon. Those stocks are really expensive to start investing in, so this is a great option. And third, they have a drip program where you can reinvest your dividends into your fractional shares. So let's jump right into it. This is the Wang Gang portfolio. Current value is $1,949.17. On the all-time chart here, I'm up 6.29%. That is pretty good. Total earned dividends so far is $8.58, and market gains is $36. So when it comes to total return, I'm doing pretty well. We are in a really great bull market right now, so that also helps. And every single week I deposit $200 into this account. I just started doing that about a few weeks ago. Before that, I was depositing $100 into my account every single week. This channel is all about making more money, saving more money, and investing more money. So that is how I plan to grow my entire net worth, and specifically also this account. So if you haven't followed me already on Instagram, what are you guys waiting for? Go follow me on Instagram right now. I do a lot of daily content there about my real estate investments, and there is a lot of really great pages out there when it comes to dividend investing. So if you want to see my real estate investments, go check me out on Instagram. This is me going through my house tour of my property. I have a duplex that I'm doing a lot of construction on, and every day I update you guys how the things are going, some of the problems that I have to overcome, and a lot of tips out there that are very beginner friendly. So, oh man, that bathroom's gross. So don't forget to follow me on Instagram. So right now we are still on Instagram, and I found a really great visual that might help you understand how much you need to invest to create this type of dividend income for yourself. If you invest into these three companies, Altria, AT&T, UPS, and you invest this set amount, you should be able to create about $100 every single month in dividend income. So typically when you invest into stocks, most stocks pay quarterly dividends. So let's take, for instance, Altria. Altria pays quarterly dividends January, April, July, and October. AT&T pays quarterly dividends on February, May, August, November. UPS on March, June, September, December. So that's why you need to invest into at least 3 different quarterly dividend stocks to have $100 in dividends every single month. There are also some stocks out there that you can buy that pay monthly dividends. I go through a lot of those in some of my other videos. You guys can go check that out here. So when I'm doing my quick math here, you would need at least $22,000 if you were to invest into these 3 companies to generate $100 every single month. I know that sounds like a lot of money. That is a lot of money. This is the advantage that everybody has, is that they can invest into these stocks over time. So one disclaimer that I have when it comes to investing in dividend stocks and doing these calculations here, these numbers are gonna fluctuate on a daily basis. From day to day, they're not gonna fluctuate that much, but maybe month to month, quarter to quarter, they're gonna fluctuate a lot. So let's take another look at 3 different companies that you can invest in so you can create monthly dividends. Receive a dividend every single month. Right here we have PepsiCo, and then we also have AT&T again, and McDonald's. So if you were to buy 1 share of Pepsi, AT&T, and McDonald's, you will receive a dividend every single month. And obviously the more shares you have, the more dividends that you will receive. And this is just another example of the 3-pillar dividend strategy that we saw earlier. And here is another one: receive dividend income every single month. This is Coca-Cola, Starbucks, and McDonald's. So if you invest any money into these 3 stocks, you'll receive a dividend every single month of the year. So all of these stocks that I just went over are part of the S&P 500. Basically, the S&P 500 is a list of the top 500 companies in America. So if you are ever wondering what stocks that you should be investing in, a great place to start and look is the S&P 500. So someone DM'd me in my Instagram a few days ago asking me how to calculate exactly how much money they would need to have $1,000 in dividend income. So that just made me realize that not everybody knows this formula. All you need to know is just a few pieces of information from the company, and you can easily do it on your smartphone. So I went over this post a few months ago. Let's take a look at Apple for example. I think Apple right now is around $200, and their dividend yield is around like 1 or 2, under 2%, definitely under 2%. So I think a lot of these numbers will change, but roughly it's going to be only different by a few shares. You would need $67,711, which equates to 343 shares of Apple to make $1,000 in dividend income per year. I own some Apple, but not too much. And if I were to strictly just go for as much dividends as possible, I would not invest that much into Apple for the dividends. I would probably go with, Home Depot. Home Depot is great, and it costs a lot less to generate $1,000 in dividends per year. And AT&T is probably where I would park most of my money in to generate $1,000 worth of dividends every single year. So let's use AT&T for our example here. It's very simple. All you're going to need to know is what stock you want to do it on and the stock price. So for AT&T, it is $34.15. The second thing you're going to need is how much dividends they pay out every. AT&T pays $2.04 in dividends every single year. And after that, the third information you're going to need is how much money you want to generate in dividend income. So let's say you want around $100 in dividends every single month. That's going to equal $1,200 worth of dividends every single year. And you divide that by $2.04. You divide that number by how much dividends is getting paid out every single year. And that's going to tell you exactly how many shares you need. 588.2. So let's say 589 shares. We're going to take 589 shares of AT&T, and we're going to multiply that by the price of the stock, which is $34.15. So you're going to need $20,114.35 invested into AT&T at this moment to generate about $1,200 every single year, $100 every single month. So in my portfolio, I don't have $20,000 worth of AT&T, obviously, but when it comes to my strategy, I'm invested in the entire stock market. My portfolio is very diversified, meaning I own a lot of stocks in a lot of different industries. That is what I like. I like a very diverse portfolio where one stock will not have that much effect on the entire portfolio. So if we will go into the communication services here, you can see that I have around a 50-50 split. I own 50% here in Verizon and 50% here in AT&T. Total value in this is around $82, $83. So I have a long way to go before I hit $20,000 worth of AT&T. So when it comes to my portfolio, I'm getting dividends all the time, even though my portfolio is very small. That's why I love M1 Finance. So today I got a dividend from Disney. Yesterday I got a dividend from Comcast, 6 cents. Thank you. Going down here, I got dividend from Stag, 9 cents. Dividend from Realty Income, 23 cents. So this is one of my bigger positions, so that's why I'm getting a lot more in dividends. So over time, I'm generating income, and all of this will just be reinvested so my portfolio can just keep on growing. So now let's talk about wheat stocks. I'm not gonna be investing in wheat stocks. I'm not planning to invest in wheat stocks. And if I had a gun pointed to my head and I had to choose, I would invest in this one ETF. So let's take a look at it. This is ticker symbol MJ, Alternative Harvest. So this one ETF, if you don't know what an ETF is, basically is going to be a basket of stocks. And in this particular instance, this is going to be a basket of stocks full of different cannabis related stocks. Price is around $28.62. Assets under management is over $1 billion. That is a pretty decent size. This is a pretty big asset under management. Expense ratio is under 1%, so that is pretty good as well. But if we take a look at the performance, 5-day down 4%, 1 month down 9%, 3 month down 20% almost, 6 months 16%. So, you know, as we go through here, it looks like they used to pay out dividends every single month, and they kind of just changed it to quarterly dividends, which I don't blame them. But wheat stocks are very volatile, and I already stated that I hate too much volatility. That is why I kind of went with an ETF. It's gonna be less volatile than owning one stock, like let's say Aurora Cannabis here. Let's take a look at some of the holdings. This is holding 35 different cannabis related stocks here. So this is going to be MJ Top 10 Holdings, GW Pharmaceuticals, Kronos Group, Tilray, Aurora Cannabis, Canopy Growth. These 4 stocks right here, these are on the top 100 most popular stocks on Robinhood. I made a video about this a few months ago, I think. To me, wheat stocks is going to be very, very similar to cryptocurrency in 2017. You saw a big bull run, and then it came crashing down, and now it's just going up and down a few $1,000s every single day. That's what Bitcoin is doing. When it comes to the cannabis industry, that's going to be tied to government regulation and how strict they are when it comes to medical marijuana and all that. So maybe if 10 years down the line the government doesn't see medical marijuana as illegal and as dangerous, then I think that, you know, these marijuana companies are going to be doing very well. But if 10 years from now they're going to be even more strict on medical marijuana, then obviously the price of these stocks are going to just keep going down. And in my honest opinion, I'd rather own all of these stocks in one ETF rather than just own one stock and risk the volatility of this one stock. If you are still interested in my thoughts on dividend investing and real estate, go check out these videos here. If you haven't liked my video yet, what are you waiting for? Go like it right now. Subscribe if you haven't subscribed. I'm coming out with 3 videos every single week, and hit the notification. I love you 3000, and I'll see you in the next video. Bye bye.